Hello everyone, this is Sébastien McMahon from IA Financial Group. I act as a portfolio manager for the diversified funds and I am an economist. This is the second conversation that we are bringing to you. Today we are Friday, March 20th. We have our chief economist Clément Gignac, who you all know very well. We have one of our star managers also with us today, so JP Chevalier, responsible for managing US equities, and you all know him from the thematic innovation fund, among many things. So let's get this started with Mr. Gignac. So we've had the historic week. Central banks and governments have announced historical measures. So how would you wrap up this week? And what if we were in school? What grade will you be giving to governments and central banks in this environment?
So hello everyone. Yes, and I probably understatement to mention historical week to start with. I will say uncharted territory, as simple as that. Could you believe it? So we start on Monday morning with on Sunday with a historical announcement from the Fed, zero interest rate. And in addition, on Monday morning, for the first time, a video conference call, just like this one, of the leader of G7. Could you believe it? It's something. And after that, we have the announcement and so on. So it's very unprecedented. I don't want to repeat all what I mentioned yesterday in our video conference call with my other colleague, in fact, Alexandre Morin, on the senior portfolio manager fixed income. But clearly, to answer to your question, I'm so impressed how fast now the G7 work together. In fact, the finance department, the different countries. So, it's step by step. Because make no mistake, it's not a financial crisis like 2008 that the financial system been broken, the banks go under. I've been the privilege to work with the finance minister Flaherty in 2008. It was a complicated thought because you have to rebuild the financial system. This time, the banks are well capitalized. They are, in fact, resilient. And now they are a big actor to help the government as well to take care of people. So first, you have noticed, it's a shock, basically, coronavirus. So you have a lot of layoff. So government replace the company and they have to send a check temporary because at some point you will have a vaccine, send a check and to support for people who have affected, just to be sure to take care of their children and grocery. So this is the first step, okay? Liquidity as well, because the companies need cash, basically, okay? Need cash significant, so it's important. So they provide liquidity through the banking system. Some other step coming that you have to bail out probably some airlines company and cruise company because or hotel because they have to go through the next 3 to 6 months. We don't know if it's 3, 6, or 9 months. It's not a precise science. We will see. Maybe Jean-Pierre will talk about that. So my point is this is very significant to do that. So the good things, the good news is they have the tools. They have the tools, okay? And you cannot judge the success of that tool by the behavior of the stock market on daily basis. It's not the way it's working. What I remember 2008-9, that take 3, 4 months to put all this together, this package, before people start to realize that sun will rise again. Now they put that in 10 days. So bear market, 23 days, the fastest ever seen. I will tell you that in the last 7 days, the fastest countermeasure reaction ever seen. And stay tuned, it's not over yet. Maybe I could be back.
Yeah, sure. All right. So, GP, but now your turn. We worked together for many years. We have invested in your thematic and innovation funds in the diversified funds at IA. So really like your style, your performance, and we've done some marketing together. And you always talk about the word exponential. So you always use exponential change in technologies. And now we see the growth of coronavirus cases, and they always use the term exponential. So could you just explain simply what you mean by exponential and mostly why it's so important for investors to grasp?
Yeah, thank you, Sébastien. Great question. First of all, thanks for doing this. I think it might stick afterward. It's my prediction. So yeah, exponential. It's, as some of you knows, it's central to my investment process. And why is that? It's because it tends to surprise to the upside. So I specialize in understanding technological development and its influence on the stock market. And some of the technological development also behave in an exponential fashion. So right now, the crisis we're living in, the pandemic, it's also behaving in terms of exponential growth. So how could we better understand what it means? Because the human mind isn't built to understand exponential. We're built to think in a linear fashion. So an example that most of you knows with the compounding interest. If you invest and you make 10% for 25 years, okay, you'll make a little less than 10 times your bet, your starting bet. Okay, so a little less than 1,000%. You don't make 250%, which would be just adding that 10% for 25 year. Okay, so as interest grow and compound, it's very powerful. So it's the same thing happening right now with the number of cases. So if a person infect 3% every day, so after this 5, the 6, the 10 generation of people infected, there's 1,000 people infected. That's why government really talk about flattening the curve. It's really important to decrease that percentage of growth of cases every day. And to bring it back to my investment process. So lots of things like the cost of computing, the cost of data storage, the cost of genomic sequencing. 10 years ago, the adoption of smartphone was also behaving in an exponential growth fashion for a few years. So long story short, it tends to surprise people because those small numbers suddenly become very, very large. So understanding exponential is really, really key to go through this period and to understand also technology.
Yeah, identify the right trends and follow them as they are developing. So maybe back to Clément. So economic data has taken a backseat because it's all in the rearview mirror. Like this morning, we had retail sales for Canada, but they were for January, so kind of not really impacting the market. And we do know that the next data points will be disastrous. So what should investors put at the top of their list of the data indicators that will be published in the next few weeks and months?
First, do not be disturbed by this economic data coming. It will be uncharted territory. I give you an example. During the crisis 2009, 2008, 2009, 2010, finally we have lost in US 5 million jobs, one of the worst recessions since the depression in the 30s. Guess what? It will be done in 1 month. Okay, so economic data, it's not, it would be terrible, no doubt about that. But you know what? It's a lot of temporary layoff, okay? Because people lay off from hotel, from a cruise company, from airline company, tourism. Do you really believe these people will be able to find another job like, no, it's not like that. So that's the reason governments step in to send check directly to people, okay? And now they have to bail out temporary facility. Bail out, it's not maybe the expression, but it's a temporary credit facility for a lot of companies who need money, okay, basically. Okay, they will have a break on different aspects, just like also maybe have a break on your mortgage payment, but the debt do not disappear. It's a break, okay? So this is the way. So this is what's going on. So economic data will be terrible. Okay, it will be confirmed a deep recession, but it's a V shape, it's a contraction. So who knows about the Q2? So, but if you wait that everybody return to their job normally before maybe add additional chips in the stock market, you know what? That will take time, and probably the market has time to return to the previous high, just like they have done in the past. So economic data, disturbing, but what will be important, who will influence the stock market, it's the action the measure that the policy makers put in place. This is what will drive. And probably the next step I could elaborate later on, but they have additional steps they can do to stimulate the economy.
Okay, good. GP, back to you. You manage the Thematic Innovation Fund, as I mentioned, where the strategy is to benefit from the profound changes that are coming from technological changes. So, would you say that what we are living now, we are recording this each from home, the kids are not at school, they're upstairs. So, would you say that what we are living now is accelerating some of the trends that you were focusing on?
Yes, definitively. As you said, look at what we're doing right now. We're all at home. We're using internet, and we have to think also what will remain afterward, after the crisis. How much our behavior will change and will evolve as we acquire new skills, as we use technology that makes us more efficient. So just in terms of what we're doing right now, we're using this software called Microsoft Teams to record this webinar. Teams this morning, they announced that since last week, it's 12 million more users that are using this software. It's a growth of more than 35% week over week. So as you can see, Microsoft, as I said, that is offering this software. Of course, there's negative impact, but also they can thrive, and they can be better in that environment versus other industry, because of course there's negative impact in many industries, in airliners, in cruise ships, in retail, in restaurants, but everything more digital. I mean, when we look at it, when we analyze what we're doing right now, how much or pattern of consumption evolve and will evolve going forward, there's some positive things, I think, emerging from that. You said kids are upstairs. Me too. They're upstairs. So older son is actually playing video games.
Yeah.
So earlier this week, Verizon came out and said, overall web traffic, everything going through the internet, it's up 20% since last week. Okay. Usually, internet traffic is doubling every 18 months, and just week over week, we're up 20%. So it's quite staggering what's happening right now in terms of testing our infrastructure. And as I said, he's playing video games upstairs, and Verizon said, video games, traffic, it's up 75% since last week. So there's companies in the US market like EA, Electronic Arts, Activision Blizzard, Take-Two Interactives. The last two are positioned in the fund. Position that we were having previously because of sound business model and more online monetization. But with that current environment, we don't actually see negative for those companies. We think it's clearly a net positive. Also, we're staying at home. We're lucky we can still continue to work, but some people are laid off, unfortunately. So people are spending a little bit more time on social media. So social media, this business model is taking advantage of online advertising. So of course, advertising budget are impacted in the current environment, but the fact that people are using more, that there's more eyes on the ball, it support the pricing of those advertising online. So those companies like Facebook and Google can be a little bit better than actually significantly better than other industries right now in the economy. Let's talk about our pattern of consumption. Somebody was knocking at the door a few minutes ago. There's probably a box from Amazon waiting for me right there. But maybe I'm not a good example because I've been consuming online for many years. But I think the current environment will make that a lot of people will actually try or for the first time or try a little bit more e-commerce, and they might stick with that. With that behavior going forward, as they see as they see that it's better for them, it takes less time to go in store and all of that. So long story short, we think that right now this situation will make many structural change that were slowly, actually quickly, but they were quickly penetrating the economy. but we think that it will accelerate all of that. So a few companies might benefit from this situation.
Yeah, we are creating new habits. So this is one of the discussion that we've been having with colleagues, that now that we've been trying Teams and it works so well, that maybe we'll try to work from home a little bit more than we did in the past when things get back to normal, and that will impact the way that we behave, what we consume. So yeah, I completely agree with that.
And maybe I will stay on the labor market much longer because I will be able to work from home, to be honest.
Yeah,
We'll see.
Exactly. It might change the way corporations are hiring their labor.
Yeah, clearly.
It can bring a lot of change in the way we're doing things.
And while we're talking about change, let's keep with you, GP. Of course, there is a big race for the first company to come up with a vaccine for COVID-19, or at least treatments for COVID-19. So I know that you follow this literature on an hourly basis, I would say. So what are you seeing now, and how can you and investors benefit from what's happening?
Yeah, will innovation defeat the coronavirus? I think with a lot of progress that we've seen in the last few years, in the last decade, that there's reason to be optimistic on that front. So obviously we need a vaccine. So there's a lot of effort, lots of money being put into research right now. Actually, the first clinical trial start earlier this week from a company called Moderna in the US. We won't have result until next spring, so spring 2021. But just the fact that they were able to start their trial as fast as they did. Let me just give you an example. When we had the crisis in 2003 with the SARS,
SARS.
What's the word in English? The SARS in 2003. Actually, from the time a company said, okay, we have a way we think we can put a vaccine and start a trial, it took 20 months from the time they start to design the trial until the time they started it. For Moderna, it took 7 weeks from the time they were able to get the genetic code to the start of their clinical trial. So really a shorter window in terms of starting to do meaningful research. But from there, I mean, we have to make sure that it's safe for everyone. That's why the FDA, I think, will be conservative, and that it will take a year, which is already quite fast in terms of timeline. Right now, that's for a vaccine. That's for immunization. Right now, there's some treatment. There's some option in terms of treating people to diminish their symptom in order to help the health system manage all those cases. So the big medication, big treatment is Gilead Science Remdesivir. It is a treatment that was already used for Ebola. The company actually is doing research right now, and the results are quite intriguing, are quite positive in terms of treating the coronavirus. So they might be available. This treatment might be available in a few weeks. So let's talk about a possible scenario. Let's be positive for a second. I mean, it's easy to be quite negative right now in that environment, but let's just design a scenario that is positive. Let's say that this Gilead treatment is approved in a few weeks, that it's quite effective. It's helping the health system everywhere in the world and in the US really manage the situation. And at some point during the summer or the fall, we have the first results of the vaccine clinical trial, and they are really encouraging. Since the stock market is looking forward, the stock market don't have any problem looking at 9-12 months ahead of it. So if we have visibility that a vaccine that is working might be coming in the spring of 2021, maybe the market will start to, come back and will overstep all the tough economic data that is upcoming in the weeks and in the next few months maybe. So that's a positive scenario. That's a scenario I'm working with. I think it's important that we have timeline, something we can verify going forward, and that's what I'm working with right now.
Yeah, in fact, if I could add additional comment of what GP had just mentioned, regarding the stock market. 10% correction, they have happened many times, okay? 20% correction, it's happened, but in fact, it's less often. But 30% correction, guess what? They happen 8 times, okay? That include the 30s. So why not remove the 30s? Because, at that time, they have no central banks and they have not the G7. And it's different. We have learned from the 30s, okay? So remove 30. So you have 7 cases that the stock market dropped by 30% plus. Guess what happened when you have reached 30% plus? Because we're there. So 3 months after, 7 times on 100% of the time, 15% are after 3 months. And a year after, 40% are. I have no clue. I'm not a guru. I have no crystal ball. 3 hours from now, 3 days from now, even 2 months from now, okay, what will happen? But I'm pretty confident that we will be more in the positive territory and we will start to recover basically, just like that we see in China, for example, that people start to return to work. I think gradually we will see people return. So this is very, very important. Guess what? The burden of proof is on the shoulder of the pessimist camp. It's not on my camp because it's 100% of the time. That is what happened. It was the script. So basically, do you want to go against the script, okay? Or sell after 35% decline in the stock market for maybe the additional 5-10%? And who knows what is. But I think stock market, you always have a medium, long-term time horizon, never 3 days or even never 3 months when you are investing in the stock market. Who thought, okay, not Mr. Trump, who thought, okay, that in the last 23 days or 26 trading session that you will lose 35%? You know what I mean? So it's fast, but do not underestimate the brain. Do not underestimate the brain of policymaker. They have learned, okay, what they have to do, not to repeat the 30s.
Yeah, great comment here. Well, I'm with you, Clément. So Canadian dollar, we always get asked questions about where you see the loonie going, and we've lost about 10% this year. We're below 70 cents. So what's your view on the CAD?
Yeah, first, what's going on right now on the Canadian dollar? Let's say this week it was very affected because a lot of US companies now start to panic, okay, because they need money. They don't know exactly if Uncle Sam will bail out them, provide facility. 45% of their revenue come from overseas. They lot of money overseas. They need their money back. So even the yen, who's usually, and franc Swiss, okay, this is safe even usually. They have under attack. When you think about that, the Swiss franc and the yen. So it's basically the panic out there. So the point is Canadian dollar, of course, affected. Guess what we have done? We have increased the hedging. Now I'm hedged at 75%. Okay, so that affected the Canadian dollar start to appreciate. That we protect our clients. Again, this appreciation of Canadian dollar because that affect the return. So you know what? In the 2008, 2009, when I have the privilege to work with Flaherty and represent my country, Canada, official representative of Canada, we has performed better than anybody else. Okay, in the G7, our economy has been less affected because our banking system was resilient. So the same thing will happen. Our it's a public system in Canada, the healthcare. It's not private, public like US, to start with. Second, we have been one of the fastest country in the G7 to react. We are the only one G7 triple A rating, okay, and debt to GDP ratio, the lowest federal debt, 30%. So the point is, you know what? Yeah, okay, 150 billion deficit in Canada. This is my prediction. Probably 7.5% GDP, but in US it would be 2 trillion anyway. They have to go, maybe 3. We have to go to 10, 15% annual deficit GDP. So the point one, conclude, when people 6 months from now or 1 year from now will check that, wow, Canada has been affected less, okay, and recover faster because we have sent the money to the Canadian fast and so on. What was very important, And, it was that Mr. Trudeau secured the border with Mr. Trump. That take probably two, three additional days earlier this week to be sure that Mr. Trump accept that we limit, mobility between the two countries, but the trucks, and the trade continue. So it was a risk a little bit, but it was a limited risk because Mr. Trudeau and Mr. Champagne has negotiated that. Now it's done. That removed what I call the tail risk on the Canadian dollar, that the flow continue because 25% economy is done. So I'm very optimistic, and I've not smoked illegal substance, but I predict 80 cents by year-end on the Canadian dollar.
Okay, good. Maybe I'll stick with you, Mr. Gignac. Yesterday you mentioned something that raised some eyebrows, but maybe the stock market could close if we get too much volatility. Could you elaborate on that?
Yeah, first, it's the alternative scenario with a low probability, but it's not zero. I explained because many people will panic. Hey, stock market could be closed. No. They want to keep that open, because it's not like 911 that the broker being affected in Wall Street by the airplane. In fact, the tower. It's not the same thing. But make no mistake, So if, the volatility accelerate, we are already minus 30%. We don't know the closing exactly as we record for today. But if, for example, a panic started and you have another minus 15 or why not minus 20 breaker, we hit the breaker circuit. You know what? It's the politician who will decide. The G7 leaders will decide. It's not true that the G7 leader will be disturbed by Wall Street, with their signal, about that lack of confidence. Wait a minute. Small investors who has work all their life, invest in the banks that authorities, as mentioned, for the last 4 years, they are well capitalized, they are resilient, they can deal with a recession. And why go to? No, wait a minute. So they want to protect the small investors, not the Wall Street. They want to protect the Main Street people because now they have to take care of the Main Street people. It's not Wall Street. So for me, if it's necessary to put the stock market in the quarantaine, they will do. And it will be a coordinated action between Tokyo, Frankfurt, London, Toronto, and New York. And guess what? It will not be the regulators. It will be the politician at the top. You need to have some additional days. And what is 1 week close, for example, to give the time to the policymaker to coordinate all the action. And after that, you reopen the stock market if necessary to close, and the stock market will decide. I'm pretty confident, just like after the 911 when they have closed for 3 days, what will be the reaction of the stock market. You will see much more green than red on your screen. I could bet on that.
All right, that makes it clear. JP, we are recording this on March 20th. It's Friday. It's 11:45. Stock market is down about 30% year to date. What's your strategy now?
Right now, I think time for stock picking. Stock picking will be the name of the game in the next few weeks, maybe the next few months. I think there will be disconnect in the market and the area of interest. I speak a little bit earlier about what's happening with web traffic. I like to say all the time that internet is very physical. Even though we talk about cloud computing, the internet is something that we need, that need real money investment. It starts with the software we're using like right now that goes through the device I'm using, which is a computer. Then it goes into telecommunication networks, optic cable. Then it goes into data center. Within those data center, there's a lot of equipment, a lot of semiconductor. Those big data center are really, really hungry in terms of energy. So they need oftentimes like wind energy, solar energy on top of them. So everything I just said right now, just to illustrate how the supply chain of the internet. So we think actually after all of that is and as we go through all of that, that demand might come back at rate higher than they were previously. So that means like everything that is related to infrastructure and data center, everything related to opticals, semiconductors. I think those are situations that are really, really right now getting beat down quite severely, and we might see disconnect in those kind of industries. I've talked a little bit about what's happening on the medical side, on the innovation to fight this coronavirus. So we think the current situation will really put a spotlight on the need to get the healthcare system in the US more efficient. So how do we do that? You use the private sector, you use companies that are really fast forwarding the innovation in terms of treating patients and giving the government money, a return for its money at the end of the day. Because as you know, the healthcare system in the US is a quite heavy growing spending part of the budget that need to be under control. So I think we'll do that through innovation. And this current situation will help to understand the urgency of the situation. So in a nutshell, that's where I will look at in the next few weeks. I tend to be more active maybe than usual if I see those disconnect in the market.
Yeah, Clément?
In my case, Sébastien, we find the banking system very attractive. Make no mistake, the market share of the traditional banks has dropped like that in the last 10 years because people who were directly on the capital market with issue of corporate bonds, issue high yield bonds. It was easy to finance people. It was risk appetite. It was a search for yield. You know what? It will, just like 911, it was before 911 and after 911. Now this time it will be before coronavirus and after coronavirus. Okay, it will be as simple as that from my point of view. So I found the banks very attractive because, they have dropped already by 45%. They have a dividend yield of 4, 5, 6%. You know what? In fact, their loan losses will not skyrocket like jobless claims. No, because it will be the government, okay, who will bail out this kind of companies, okay? And if government do not guarantee the loan, they will go under the airline company. So you know what I mean? So I don't want to underestimate no complacency. Okay, they will have some loan losses, okay? But the next step is government will stimulate the economy with sales tax disappear, GST, 2-3 months. The same thing in Europe, US, because they want to stimulate the economy at some point. So for me, the banks very attractive. And when this, just mentioned earlier, central banks and regulators and finance minister mentioned to the planet that they are well capitalized, the banks. Okay, they are resilient to any recession by stress test. And they will accept to go under, give me a break. So for me, I think that if you have not a 3 days, 3 hours, or 3 weeks horizon, but 3 years horizon, okay, I think they are very, very attractive. Guess what? We have increase in the last week our exposure to banks I would say in a significant way.
Okay, good. JP, it's now time for concluding remarks. So, do you have any finance 101 advice that you'd like to send out there?
Sure. Why not dollar cost of raging? I mean, Peter Lynch used to say that there's a lot of value destroyed by people trying to call either the top or the bottom of the market. Those that get it often get it by chance, to be honest. So invest a little bit every paycheck. It might be a good idea. That's what I'm doing. And maybe I just got mail, so maybe I can read it over to you. It might be some good advice. So it reads that way. So, dear GP from 2020, thanks for buying stock during that crazy year. Signed, JP from 2025.
All right. So you have access to time machines now. That's awesome.
Yeah. Letter from the future.
All right. Thank you, Clément. Any advice 101 you want to send out there?
Yeah, maybe two. The first one is just maybe to repeat what I mentioned yesterday in our part one of this special coronavirus, what we have to do. Basically, we learn about ourselves. And this kind of situation, you learn about yourself. Some people mentioned they are able to deal with volatility as long as they increase on this, but it's not the way it's working. But recession could arrive at some point. It was unexpected, I know, but economic cycle exists. And stock market cycle exists. So you have to learn about yourself, okay? And that influenced me for the second one. And as a matter of fact, I think that I will add on Jean-Pierre. So Jean-Pierre, I have a gray hair in my case. Huh? I have 5 grandchildren. And you talk about 2025? Exactly, because some of my grandchildren will be close to university at that time. And, I have some money in some accounts for them. It's managed, okay? But I think after this video conference call, I will give a buzz to my financial advisor. I know it was prudent. I put that in the selection fund or focus fund or diversified funds to us prudent profile. But maybe we can go to more diversified, or some it was diversified because they have 13 years old, for example. So the point is when they will be close to their university, so they have a 5 year. I have 5 year comparison with them. Okay, so why not benefit take this opportunity? Excuse me, of this basically significant drop in the equities. And now I will not finance Justin Trudeau or Mr. Trump at 0.5% for the next 5 years or 10 years when I have a good opportunity, whatever is some sector you talk about, or the banks. So for me, it's maybe the time to think about that. So is it still maintained in the slot of the prudent so the point is maybe in some case it's the case if you're close to retirement. I know that some people will hesitate and they have a legal issue. I understand that. But in some case, maybe we can skate a little bit around that and just capitalize on that. And I think that I'm sure that in 2025, Jean-Pierre, my grandchildren will be proud of his grandfather.
Yeah, see, it's always a question. Someone says the market is down. I don't have money lying around to invest. Maybe just taking more risk now would be a good idea to benefit from this
Yeah.
eventual
When
rebound.
it's allowed to do that,
Yeah,
because of
exactly.
course you have a little bit the red tape, you have to be compliant,
Yep.
but in some case, it's possible, but you have to talk with your clients
Yep.
and the clients maybe talk with the advisor, or since they have a lot of clients who watch this video, be proactive, just give the phone call to the advisor.
Yep.
They are open mind to do that.
Yeah, opportunities abound. All right, so I think that wraps it up for our conversation today. So thank you very much, JP, for your time. Thank you again,
Thank you.
Clément, for doing this. So you can
Welcome.
always follow us at ia.ca/economy. Everything we do is posted there. Social media, Facebook, LinkedIn. So you can be sure that in these tough times, we will always be jumping on the ice and keeping you posted with our views. So thank you very much, everyone, and have a good weekend. Thanks.